Just a quick reminder before we get started. Remember, it's a live webinar presentation. It does use a lot of your bandwidth on the internet. So if you have any other programs open, it's worth closing them down, and that will prevent you from having or receiving an interrupted broadcast. It's Monday the 24th of June 2013. A absolutely jam-packed calendar this week, but full of pretty much useless items. Probably until the end of the week, where it gets a little bit exciting. I say a little bit exciting, but even they're pretty dreary items. On Thursday and Friday is the economic summit for EU finance ministers. Doesn't tend to create that much volatility. On Friday we have a release of the latest Canadian GDP numbers, and I think that's about it. So on the whole, it should be a fairly technical week, driven by existing sentiment rather than anything else. What is interesting though is that it's the last week of the month. Not is it just the last week of the month, but it's also the last week, or we're coming up to the end of the second quarter, and so next week we've got the beginning of the third quarter in the forex market. It's going to be a key level which is going to be worth marking off, particularly in terms of trying to establish bias. We've also got a bunch of data coming out from Japan over the course of this week. None of it is marked as red or anything like that, but we have May CPI, and I guess that, along with the other data, will be closely studied to see if the Bank of Japan's easing policy and Abenomics are having any kind of true impact on the Japanese economy. We're going to start this morning by looking at the yen crosses. The last time, a couple of weeks ago when we were here, we were talking about hunting for a floor in USD JPY in particular, but as well in the other yen crosses with the majors in GBP JPY and Euro JPY. The levels that we marked held up fairly well, right? So we managed to bang out a very substantial 400 pip trade on USD JPY, pretty much from the low here. And the question that we have at the moment, although we are looking for a higher high in USD JPY, is whether she moves there in a straight line, or whether we're going to see further corrective moves first. So what I want to do is outline the key level, or the key levels which I'm watching on USD JPY, the levels of interest, develop a map for the price, develop some kind of price expectation, and then if we see price moving according to our expectation, we can get involved. We also need to look at what would invalidate our net biases on these particular instruments. So just starting with the USD JPY, in the first instance, and we have a couple of options here. We have a couple of options here, and it's just understanding what those options are. So we're looking for a higher high. We're looking for her to reach eventually 107 and then 110. We believe that structurally there's been a change in the yen crosses, and so if the price is falling, we believe that to be a corrective move rather than the trending wave. And the key level that we're looking at right now is an SR flip, which has taken place here around the 95 handle. And I believe that's the key area now. A pullback toward the 95 handle would have me looking to initiate long trades on the USD JPY. So I'll be looking for longs around this 95 handle. But if it happens that she goes sub 95, she's heading into 94, 94 and below. At that point, the trade becomes invalidated, right? So it would no longer be sensible to be holding on to those long trades. It's only sensible as long as the price is sustaining above this SR flip zone, right? So we can see that we've had resistance there a couple of times, a pullback to that area. We're going to be looking for support. That's the kind of trade recommendation that I have as far as the USD JPY is concerned. Any break below that level, and if the price is holding below that level, I would not be initiating those long trades. The expectation at that point would become that she may well attempt to break even lower. My worst case kind of scenario on this, I say worst case scenario, it's only worst case if you've got a trade and you end up being stopped out of that trade. But if the price is breaking down below 93, then at that point my expectation is that, you know what, she could fall certainly towards the 88 handle, and then from 88, 87 even, I would start looking for a rounding structure before eventually she makes a very substantial move higher. That is something that could take maybe the greater part of the third quarter of this year to play out, but it's something which I'm keeping in mind, right? So, whenever you take a trade and you've got a position, you have that thing where you can end up becoming over optimistic just because she's rushed 300-400 pips into the money. We took the opportunity last week at round about the levels where the price is right now to cash on our long positions. So we've cashed up the major part of the long positions. We're holding a very, very small, insignificant vanity position just in case she chooses to rush higher from here. But my expectation would be for support around the 95 handle. If that 95 handle does not hold it at the SR flip, then she could go deeper and we would be looking again near the 88 level for the price to be held there, for there to be a floor in USD JPY, and then from there we will be ultimately looking for that next leg north on this instrument. Alright, so just kind of summarizing that, we're looking now for a floor at 95. If the 95 does not hold it, we're sitting aside and we're waiting. If you have a short bias on this instrument, I guess you can see resistances being hit. So we have resistance which has been established here at that 99, and we see as the price is getting close to that level, she's being rejected from that level. For the bullish momentum to maintain, we really need to see a break through that, a pullback, some support being established for her to move higher. So if she's going to break higher this week, it's got to be a break through that 99. Certainly a break through the 100, I guess, would end up exciting market participants a lot, and it being a key significant level, that's all, right? So a very kind of general outlook on the USD JPY. In the long term, we are still short the yen. We're still bullish on the yen crosses with all of the majors. It's just going to be a question of how she plays. We got involved in that trade at round about the 94 handle. We cashed up the greater part for near 400 pips. We're looking for a pullback now. We'd like to play long from around the 95. A break below that invalidates the bullish bias, and that would have me sitting aside. If you're short on this instrument, a break below 95, you're going to be looking for the 88 handle. So there's something there for everybody right now, depending on the net bias that you have on this instrument. It is all about price, and it's all about the proximity of price to those key levels. If we're looking at the other yen crosses, GBP, JPY, Euro, JPY, it's pretty much the same story. We marked off key levels a couple of weeks ago on these two instruments. With the GBP, JPY, we were looking at this cluster here on the left hand side to offer support, and that's exactly where she made her move from. As long as the price remains above this cluster, then technically the instrument remains a long. A break below that cluster, so what we've got going on here is the price broke higher, support. We had a confirmation of that support last week, and as long as the price is now remaining above that block, technically the long bias remains intact. A break below that block, however, if it's support, then on a pullback you would expect for that to become resistance, and you look for the price to break down even further than from where she is now. If she does choose to break down, then I guess probably the key area that I would be thinking about would be this area coming in somewhere around here, which represents our yearly opening price. Right? So, so far we're bullish on the year. A pullback towards that yearly opening price, that represents a key flip zone. I'm calling it a flip zone. It's not a technical flip zone. It's not so much to do with the support which has been established at that level. It's to do with a wider technical bias, right? So if you're looking at it purely from the point of view of numbers, and you're looking at it purely from the point of view of a technical reference point, the best reference point that you have on the wider time frame is the annual opening price. You're either up on the year or you're down on the year. So in the first instance, it's about the support block that we have at this level. A break below that block, that would have me standing aside on the long trades until clear bullish momentum is established, certainly thinking that if she's able to break below that 146 handle, then to the downside, it possibly opens the way towards 138. Again, still, I'm maintaining a long-term net bullish perspective on the yen crosses, but it's a question of how that's going to play out and over what time period that is going to be playing out. Right? Those are the questions which I'm asking right now, or those are the key issues which you have to be bearing in mind. But from a structural point of view, these charts are very, very clean. I'm loving the structure on these charts. They're amazingly clean. Euro JPY, a similar story. Alright, so a couple of weeks ago we marked off this block here for support. This is coming in somewhere between 24 and 25. Again, we'd had a support which was established there, and that support was confirmed last week. That zone determines the net bias for this instrument. As long as the price is able to sustain above this level, then technically the longs remain in play. Only a break below that would give cause for concern, and on a pullback you'd be looking for support to turn resistance, and then possibly a push towards 119, 118 again, which is kind of reference, maybe even lower, right? So a push possibly towards 115 even. You know what? If she really wants to go for it, if she wants to go crazy, right, you could get a much more substantial, deep correction. You just have to kind of consider the idea that over the course of the last 12 months, so we're looking at last summer when this rally started, she's moved what? Almost 4,000 pips. So to get a deep correction on that, it would not be unusual. A break below that support and it really opens up the door, maybe even looking sub 20 before the next bullish leg on this instrument. Can't rule it out, but the key issue is that she needs to break that support first. A failure to break that support, and what it means is that the bull trend is intact, and that is the trend that I'm looking to ride right now. That's the trend that I'm interested in for the time being, unless on that wider time frame structurally we get a break of that support. We just had a question about USD and I'm going to look at that, although it's not on my schedule. I don't want to look at it because we looked at it maybe a few weeks ago, and I just want to demonstrate that point about the annual opening price. You see that blue line which I have marked on my screen? Right, that was the yearly opening price for USD CHF. It represents a key technical level from which we can establish bias. A couple of weeks ago, the price had pulled back to that level, and in my trade notes at that time, I published this chart and I said, look, you know what? She's at that level. If she stays above that level, then the year is bullish. A break below that level and the year is bearish. You can expect a reaction at that level. You know, something's got to happen. The price has to move away from there. That's why it's such a key, critical, important level, right? So that's USD CHF, and the key marker that I have there on the screen is that 9140. 9140 is the key for this instrument. As long as the price sustains above that level, you can be looking for the price to be moving north. And if it ends up that she breaks below that level, then we're going to be looking for the price to be moving south. Alright, so it's all about 9140 if you're looking at the USD CHF. Right. Other pairs that we want to be looking at, or we want to be paying attention to over the course of these next 1 or 2 weeks, mostly related to the Aussie and the Aussie crosses. Let's start with the AUD-JPY. In fact, we're going to be covering pretty much all the Aussie crosses with the majors. But AUD-JPY, is it basing? Is it maybe creating a very ugly double bottom here on an hourly time frame? This kind of structure I refer to as an ugly double bottom. You know, she's not done this, but she's doing something like this. Could be an ugly double bottom. It could be a triangle. In any case, what's going to be important is if this is a double bottom, you want to wait. You know, and AUD-JPY, there's a little bit of a waiting game here, but I think it will present some good trade opportunities. Usually when you have price structure consolidating like this, very, very tight, and you get a momentum break from that structure, you tend to get a lot of follow-through, right? You tend to get a lot of follow-through, and it's that follow-through we're going to be looking for from a momentum break. She's at a level where she could break in either direction. She could break long, she could break south, but when she breaks, it's going to give follow-through, and that's the key issue here. So I'm monitoring this pair, thinking in the first instance it's going to be an ugly double bottom. So if I get strong momentum break here on AUD-JPY, and we already made an attempt last week on that. I was stopped out on that, but it's okay. Just waiting. If I get another strong momentum break, I'll choose to give that chase. Certainly, if she is able to make it through the established resistance which has come up here now, and that is pretty much being held at that 91 level. If we get a strong momentum break through that, some support being established, then there is no reason not to be looking for the instrument to be breaking higher. If we end up getting a break of the floor, right, so we can see some support which has been established there, and one of the best ways to join a downtrend is when support is breached, and on a pullback support becomes resistance. We're going to be looking for that play too. So she's in the middle right now. It's a little bit of a waiting game, but I do think that she's going to present some good opportunities to get involved, some good risk-defined opportunities, where either there's another 400 or 500 pips to the downside on this, and in a similar kind of vein, if we do get that momentum break north, then maybe there are 400 or 500 pips to the upside on this instrument. In any case, we're just looking to chase the technical volatility that develops as a result of either of these breaches taking place. So AED JPY, it's not a pair that I monitor very regularly, but it does look as though she is giving that clean kind of technical setup, the kind which would allow for a very good risk-defined entry with a reasonable range to be chasing to the upside, or a continuation of the bearish momentum and the bearish trend to the downside. Okay, it's a good one. Definitely worth monitoring over the course of the coming weeks. The other Aussie crosses that we're keeping an eye on, GBP AUD and Euro AUD. We've got a couple of trend walls here. So this is the GBP AUD, and we just like the idea that you've got resistance, and the wall has been confirmed as support. So from a technical perspective, as long as the price remains above this wall, technically she remains along, and we're looking at a continuation of bullish momentum. If it happens that the price ends up breaking down below that wall, then on the underside you would expect it to hold as resistance, and at that point it would be fair to be looking for trades to the downside on this instrument. Alright, so the bullish momentum is still very much intact, and as long as the wall holds it, we will continue to assume that the bullish momentum actually remains intact. Only a breach of that wall would have us considering the short trades on this instrument. Again, it's just a clean technical. It's a very, very clean technical. It allows for bias to be established. It may be possible that we're in the early stages of a SR flip here if you're looking at the very short term. Alright, but we like it. We like it because it will give the good, clean, risk-defined entry. You know exactly when you're wrong. You'll be trading at a line or a level which gives you black and white. It doesn't give you a shade of grey, right? And I hate trading those levels where it's a shade of grey. When it's a shade of grey, what happens is you take that trade and the price goes against you. You end up moving your stop loss because it's a shade of grey, because you're not sure about what condition would invalidate that trade. When you have a line like this and the price is below it, it's very obvious that that long has been invalidated. Whatever established the long bias, if the price is below it, it's invalidated that bias, right? So nice clean technical play on GBP AUD. Continue to look for that bullish momentum unless we get a break below that wall, at which point we can start looking for some bearish momentum. Euro AUD. again, a very clean technical play. We have that resistance wall here on this instrument, and again she gave a very clean bounce, right? So resistance, we like this one more because of the multiple touches, and here a pullback. It was support and a pullback, and you'd be looking for support again. Even if it doesn't pull back, the technical bias above this wall is that you ought to be looking for that long trade, only a break below that wall, and the long bias becomes invalidated at that particular point, right? So all the Aussie crosses right now giving very good, clean, clear technical biases, giving technical trades, just using either a single level or a single line in order to establish that net bias. Alright, we like it. We like them very, very much. I think they're going to be worth keeping an eye on over the course of the coming weeks. Certainly, they present opportunities for good risk-defined entries with significant upside or significant downside, depending on the direction in which they break. All right, so we like them. We like them a lot. Okay, last one up that we'll be taking a look at. GBP CAD, Pound Canadian. Pound Canadian, she found resistance at the 60 level, and you know what, she consolidated under that area for a long time. She consolidated under there for a couple of weeks before eventually last week making a break. On the pullback, you can see she's hooked, and she's made support here at 160 before breaking higher. 160 now determines the net bias on this instrument. As long as the 60 is holding, then to the upside, we have actually a wall which is heading up. You can kind of see that we're just connecting support with resistance. The upside would be looking for another strike on the underside of that wall. That would become target to the upside. And what we're saying in effect is that 160 is the key level as a flip zone, right? So as long as the 160 is holding, we can maintain a bullish bias, looking to the upside for a strike on the underside of that wall. It doesn't matter what price she goes and hits that wall, 63, 65, 67, it really doesn't matter. You'd be exiting that trade on a strike of the underside of that wall, and would be looking for 60 to hold it, right? We've got a support which has been established here, so as long as the price is able to stay above that area, technically there's a long bias. If it happens though that she breaks below there, then it does open up the downside again, and to the downside we're looking at our last we're looking at that breakout price where she broke the line. So to the downside we're looking at around about the 56.50 area. Okay, don't rule it out. If it happens that she's breaking below 60 on a pullback, you're getting some resistance established, that will open the door to the 56.50 handle. Alright, that's what we're looking for. So it's all about the 60 now on the Pound Canadian. Either she continues pushing toward the upside, that 60 holds, she pushes towards the upside, 163 maybe even beyond, a break below that 60 level, and it really does open up the downside, and it opens up 56.50. And in fact, even though it might sound very, very contrarian right now, I actually like the idea of a retest of the 56.50 more than I like the idea of 63. And that would probably be my preferred trade, providing we get that break below the 60. So there's an entry condition there. She just needs to start breaking down, really, more than anything else, giving a very, very clear indication or clear sign that she's going to do that. But once she starts breaking down, I have very little doubt that that 56.50 will be retested over the course of the coming days and weeks. So maybe over the course of the next 1 or 2 weeks, we're looking at a retest of 56.50, and that is actually my preferred trade on this particular instrument. Okay, that's your lot, folks. That's everything I wanted to cover. So I'll take the rest of the questions, or the rest of the question, not in plural. Yoram is asking about Euro CHF. Euro CHF does not even figure on my screen. I think I'm asked about Euro CHF practically every time I'm here. Alright, it's not a pair which I really monitor, but okay, come on, just for entertainment's sake, let's take a quick look at what the FTSE is doing. She's heading towards that key 6,000 level right now. Not a good. It's not been a good few weeks for the indexes, has it? Will there be life after QE? It's a question that everyone's asking. Certainly, the big players, the market participants, they don't think so. All the indexes have been selling off quite heavily. Interestingly enough, just in case you weren't aware, the BIS came out this week, earlier this morning. There was an announcement from the BIS. It's the Bank of International Settlements. It's the central bank for all the central banks, and what they're saying now is that all of the central banks need to end their easing programs and look at other avenues for generating growth. So it's not just the Fed, folks, it's everybody. The market's not happy about it. You can tell. Look at those huge sell-offs. Alright, let's change this to Euro CHF. It's worth monitoring the FTSE if you want to have an understanding about relative strength and weakness in the cable crosses. It tends to be a good indicator, sometimes leading, sometimes lagging, but there's not a lot of hope for the pound right now. Carney takes over next week at the Bank of England. That should be interesting. A lot of commentators in the long room are expecting that he's going to engage actually in more easing, which is quite interesting, considering the viewpoint of the BIS and other institutions right now. Okay, here we go. This is the Euro CHF. Okay, so pretty much exactly the reason why I'm not interested in trading it. But if you are looking, I guess it depends what you're looking for. I guess the obvious is, or rather I guess if we start from the obvious, is there's a bit of a downtrend here. If you are looking for the S&B to be intervening in this, and I guess the declared floor is coming in around the 120 level, we're still significantly above that. You're going to have to wait for a trendline break before you get excited about pushing the longs on this, unless you are in the game on a purely speculative basis. Alright, so if you're in this on a purely speculative basis, you're just going to fade 120 with an expectation that the S&B is not going to let you down. Alright, beyond that, there's not really much technicals here. It's a downtrend, it's falling. The sensible thing to be doing would be selling. Right? It's a scary market, the Euro CHF, and it's scary because of that threat of intervention more than anything else. Your medium-term trend here over the course of the last few months has been established pretty much, looks like from May, is it's headed down. alright, which means you ought to be selling if anything. A trend line break, any sign of momentum to the north, then maybe get involved in buying. Otherwise, just looking at this chart again, and I guess the last time I probably looked at it was some months back, but I guess I'm remembering why I don't look at it. Right? I guess I'm remembering why I don't look at it. That's your Euro CHF covered. Let's just get back to the UK 100 GBP. Okay, dollar Canadian. Pan on fire. Where's dollar Canadian going? You know it already, mate. Yeah, it's there. 106, folks. Yeah? You heard it here first. You remember now. You remember now. Okay? Yeah, well, you know what? It has been. It's been a bit of a joyride, this one. Right? And you know, joyrides are scary. It's been up, it's been down, it's been up, it's been down. But what was important with the dollar Canadian was the price at which you exit. That's what was important with the dollar Canadian. And you know what? She's there. So, I don't know. Yeah, we were right. But how much money we made on that, that's a different story. That's your kind of traders, I don't know, you know, I'm lost for kind of words on it. I don't know what to call it. Maybe it's irony, right? You know, sometimes you can know exactly where the price is going, but you fail to capitalize on it. Inside of all of those swings, I maybe caught the best part of 250, 300 odd pips, not more than that. But she's headed to 106. That's where she's going. And just like you, she's on fire right now. Don't be selling it. You know, don't be selling it until she turns. At least wait for a turn on the daily. Once the daily has turned, then you can start thinking, have we hit an intermediate high? Maybe she's going to make another move to the downside. I'm all for range play on the dollar Canadian. I do think that she will top out at some point. And I don't think that she's far from doing that. Alright, I don't think she's far from doing that. But just wait for her to turn first. We said 106. Now I'm saying 102. Alright, that's going to be the next target to the downside. It looks like a fairly obvious target. In fact, would probably be crazy for not saying it, but there's your SR flip. It would be unusual for that price area not to be retested, but you have to wait for her to turn first. I will not be fading it. I would not be fading the shorts on this instrument. If she's going to turn, let her turn first. Once she's turned, get excited. And maybe you might find yourself that she's hit the top of the range, and she will head towards that 102, and short plays can start earning money again. Alright, but I guess my viewpoint on this has been established for a very, very long time. We were looking for that move to the upside. It's exactly where she's gone. Alright, we didn't make as many pips on it as we had hoped, but you know what? There's still a lot of intellectual satisfaction in that. Right? There's a lot of intellectual satisfaction in that. Just knowing where the price is going, it means a lot. Next time, we're going to make some pips. Okay, folks, I think that's your lot. There's no more questions there. Thanks very much for attending this week. I'll be back in about 2 weeks' time. So this show is no longer on a weekly footing. I'll be back in 2 weeks' time, which, let's just check the calendar. I think that will be the 8th of July. I'll be back on the 8th of July. Thanks to the team at FX Street, as usual, for providing this platform. Thanks to you guys, obviously, for attending and taking the time to do that. Don't forget to check out my website. It's www.wmdforex.com. I'll just type that in there for you. If you'd like my trade notes, if you want to hear me every week, you can subscribe from my website. If you want to join my live trading room, you can contact me on Skype for more details. My ID is WMD4XX. So until next time, wishing you some great trading. Cheers, fellas.